Hey everyone, I'm Roger Herring and I am the Investor's Accountant. And welcome to this week's Ask Roger. This is where you get a chance to ask me a real estate related tax question. Today our question comes from Miss Clara in Roswell. Clara writes to me, I heard you mention that there is a way to create passive income and be able to take rental losses that you otherwise could not take. Can you explain that? Sure thing, Clara. Glad to do this for you. This is something we call using a spousal partnership. Now, this unfortunately will not work for everyone, but it works great for married couples. It can work for domestic partners, and it can work for closely related individuals. All right, it will not work for someone that's single though. So here's what we have to have. We have to have some passive losses that are trapped. Well, how did the passive loss get trapped? Well, remember, if you are a passive real estate investor, you can only take your passive losses to offset passive income. If you are an active participant, you can only take $25,000 of your losses until you get phased out by income. So let's assume that we have a couple and they are phased out. I'm going to actually base this on a real couple and something that we actually did. The numbers have been changed and the names have been changed. So we have a husband. Husband is W-2. He's making $400,000 a year, okay? His wife is a consultant. Her business brings in $100,000 a year. This is an S corporation. She pays herself $50,000 as salary, and she pays herself $50,000 as a pass-through. Okay? So, all told, their income is $500,000. Now, not only do they work, but they also have rental property. And those rental properties each year throw off what we call a phantom loss. Now that means that the properties positively cash flow, but for tax purposes, they're showing a loss. And because of the amount of money that they make, they are totally phased out. They can't take any of that as a deduction against their current income. It all has to carry forward. Well, what if we make one change? We're going to change this S corporation right here. We're going to change it to what we call a spousal partnership. Okay? So, here's the assumption. Each year, that rental portfolio throws off an $8,000 passive loss. Now, they've had these properties for quite some time, almost 8 years. So, trapped, they have $64,000 of accumulated loss that they haven't been able to take. So what we're going to do is we're going to convert that S Corp and we are going to make it a spousal partnership. So this is what's going to happen. This is a spousal partnership. There's two partners. The wife is what we call the general partner. Okay? This is her consulting business. But now we're going to add her husband as a limited partner. He has no say-so in what happens. Okay? He's limited. All he gets is money. And what's going to happen now? This is still generating $100,000. She's going to get $50,000. And remember, she was taking a $50,000 salary. So because she has to pay self-employment on this, which is the same as payroll taxes back in the S Corp, there's no difference. But now, her husband is going to get $50,000 as passive income. There's no self-employment tax on it, but look what it does. One of the rules says we can take passive income and absorb passive loss. So the first thing that we're going to do with his 50 is we're going to reduce it by this $8,000 that was thrown off in rental losses for the year. So now we're down to $42,000 of income. Would we like to offset the rest of that income? Sure we would. Because we can offset passive income with passive loss, we can recapture $42,000 of this and that brings the taxable income to zero. We have just recaptured loss and reduced their taxable income by 50 grand. Clara, I hope that answers your question. If not, feel free to shoot me an email. And guys, hey, if you would like to get involved with the Ask Roger, shoot me a question. You can comment right here on the video. You can shoot me an inbox on Facebook, or you can send an email to info@investorsaccounting.com. Okay, be sure you click on subscribe so you won't miss any of our videos. And hey, until next time, happy 4th of July and Roger out.